Hi, welcome to this week's MarketSmith Market View. Today, we'll break down the latest market trends, highlight sectors showing strong relative leadership, and walk through a few stocks that are shaping up with potential setups. The whole idea here is to help you read what the market is actually telling you and approach it with clarity and discipline. All right, let's get started. Nifty 50 has officially moved into a confirmed uptrend, breaking above 25,670 to notch a fresh 52-week high. The index is trading firmly above all major moving averages, suggesting strong bullish momentum. In this environment, stocks shaping early-stage bases with high relative strength and solid fundamentals are ideally positioned to lead potential gains. The market remains in a confirmed uptrend as long as overall action stays constructive and the Nifty holds key support levels. Sustained strength above moving averages indicates continued institutional buying. However, if the distribution day count increases or the index falls below critical support, the outlook may revert to uptrend under pressure, reflecting heightened risk. Resistance lies between 26,000 and 26,300, a key breakout zone that could trigger new all-time highs. Support at 25,400 marks the crucial trendline retest level. Not all sectors are moving in the same direction. Most major sectors, Nifty bank, financials, metal, auto, pharma, and consumer durables remain in confirmed uptrend and continue to trade comfortably above key moving averages. Metal leads with the strongest relative strength, while bank and financials stay firm near highs. On the other side, realty, FMCG, IT, energy, and media are still uptrend under pressure. IT and energy remain below their 200-day, and media is the weakest, down nearly 40% from its 52-week high. Overall, leadership is clearly coming from metals, financials, and autos, indicating a healthy but selective rally. This highlights why maintaining a watch list is important, so that when sectors rotate into strength, we are ready to act. Here are a few stocks worth studying this week. APL Apollo Tubes. The stock broke out of a cupwit handle base on above-average volume, showing strong institutional interest. It is up about 1% from the pivot, with an EPA's rank of 92, buyer demand rating of B, and a rising RS line signaling a constructive breakout with solid demand and momentum. Aster DM Healthcare Ltd. The stock delivered a breakout from a cup pattern and is currently testing its 21 DMA. It holds an EPA strength of 70, a strong price strength rating of 87, and a buyer demand rating of B+, reflecting robust institutional interest. Technically, the stock is trading above all key moving averages, reinforcing its positive trend. Bharat Forge Ltd. The stock is trading inside a cup-base pattern. With an EPA's rank of 77, price strength rating of 73, buyer demand rating of B+, and a strengthening RS line, it presents an attractive setup for investors. The stock has delivered a breakout from a cup pattern and is trading plus 3% from the pivot. It holds an EPA's rank of 98, a price strength rating of 78, and a buyer demand rating of a-. Technically, the stock is trading above all key moving averages. Craftsman Automation Ltd. It specializes in precision manufacturing and engineering solutions. It serves diverse industries, including automotive, industrial machinery, and aerospace. It has an EPA's rank of 74 and an RS rating of 85. It is trading 6% below the pivot, with a breakout potential. So, how should investors think about the current market? You just have to follow these guidelines. 1. Keep exposure light until the market shows clearer strength. 2. Focus only on stocks with both strong fundamentals and constructive technical setups. 3. Avoid chasing extended stocks. Instead, wait for proper entries backed by volume. Above all, patience is key. Let the market confirm before making new commitments. That's it for this week's MarketSmith Market View. Remember, the goal isn't just to spot trades, but to build the habit of analyzing market action, sector strength, and stock structures with consistency. Thanks for watching, and see you in the next update. Information contained herein is not and should not be construed as an offer, solicitation, or recommendation to buy or sell securities. It is for educational purposes only. For more information, see our legal disclosure.